Loud and clear, Bill. Thank you. How's everybody doing today? All right, Discord guys are here. Bob attending. Martin can see you. Crazy markets. Okay. We will talk about crazy markets as well. Give me 1 second. All right, let's start. Thank you. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Welcome on Discord. Welcome on YouTube. Let's see, is Alon here? Alon is here. So welcome on YouTube, Discord. One of the main differences between Tradespoon, Yellow Tunnel, and maybe some of the other services out there is that we are concentrating on two very important parts of trading process. One is technology, building models using latest advances in artificial intelligence, using neural networks to train our models and make prediction using latest advances in artificial intelligence. And so we have a team of financial engineers that do that, but in addition, we have Keith and I are trading these signals in a live trading room environment, right? So very important distinction. Not only we're doing technology, but we're also trading. And between Keith and I, we have probably over 40 years, maybe more, of trading experience. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. If you're new to trading stock or options, I encourage you to pause the screen and visit this link, optionstrading.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right. So again, trading psychology is extremely important, especially when the market pulls back, right? When market rallies and everything goes up, trading plan, trading psychology is not important, right? You can buy NVIDIA, you can buy Bitcoin, you can buy JP Morgan, Microsoft. They're all kind of moving in a similar direction. When the market pulls back, usually it happens quickly, right? And you have jump in the VIX volatility. And how do you manage that, right? I thought we're going to have a pullback closer to, September options expiration, third Friday, but we had it the first Friday or first week of September. So it's hard to time exactly when the market is going to start selling off, 3-4%, per day. So the only thing you can do is, concentrate on the process versus outcome. By doing these positive and negative visualization, right? You know that, percent correction considered to be healthy correction in any bull market. It's just hard to determine, whether it happens after NVIDIA earnings or after unemployment data or after, Jackson triggers a pullback. That event is hard to time it. Maybe you can predict it, but time it is very difficult. So for that reason, usually you control the portfolio drawdown, right? Number of positions. First of all, cash. We talked about that, probably on average, you want to have 30% of your portfolio in cash. In case NVIDIA does sell off 30-40% and you think this is a, on a buying opportunity, you want to have a cash available. So 30% in cash and then portfolio drawdown, right? This is number of positions times position size. And again, I propose especially if you're new to trading, 4 positions, 2.5% of account value per position. So even if you had 4 bullish positions, let's say you had Bitcoin, NVIDIA, I don't know, JP Morgan and Procter and Gamble, right? So even if you were diversified and you had 4 bullish positions, when the market sold off and QQQ dropped 3% in one day, you're limited to 10% pullback in your portfolio, right? You basically exit out and just say, listen, volatility is up, Japanese Nikkei is down, NVIDIA is down, I'm gonna sit on the sidelines, and you're down 10%, right? If you have 8 positions, or if you wait with the hope that the market, this is just a small price fluctuation and market will recover, then you can have, 15-20%. Anything above 20% drawdown is very hard to to make the right decision, right? This is when the emotions take over and you basically usually sell at the bottom of the sell-off, right? You sell at the bottom of the sell-off. So in my mind, the only way to deal with these corrections is to know how many positions you have, decide what's the maximum drawdown on a position or on your portfolio. And what also helps is having hedges, right? I put IWM hedge, that's working. I'm put SH hedge, it's working. So you find assets classes that are inversely correlated to market pullbacks, right? Market pullback, right now, treasuries rally, so people buy bonds and people buy, inverse ETFs, right? Some people buy gold, right? So that's very important. All right, so again, we talked about that one thing that you want to keep an eye on, where the market sold off because of the 2 events. One was the unemployment data, was initial pullback, and then Nikkei dropped, biggest drop since 1987, right? So multi-decade drop from 42,000 to 30,000. And we said that it looked like a V-shaped recovery, broke above 50-day moving average, stayed there, for probably a week, maybe longer, and then you have a quick pullback in Nikkei. So the carry trade is still on, right? The yen hasn't really dropped significantly from that point, and Nikkei continues to deteriorate, right? So I would keep an eye on Nikkei. Where did it go? They just deleted it. Oh, here, sorry. Moving average below 50-day moving average, and it's sitting at this key support, right? Back to March of 24, the pullback, April, March of this year, Nikkei is sitting again on this line. So this is an important support line, and I would watch. This is probably one of the more important charts, technicians and economists look for, right? So this is area of concern. If it breaks below that level, most likely it opens the door to revisit the lows again. I was a little bit surprised that NVIDIA market was up last Friday and Thursday after NVIDIA earnings. but NVIDIA did pull back, and you can see now it kind of where NVIDIA is going is where the market is going. And NVIDIA broke 50% retracement and broke through the support, so the next level is 98, 100, right? So NVIDIA is probably going to retest 98, 100 soon. Again, that's weakness in the market. Bitcoin dropped below 200-day moving average, similar to Nikkei chart, so that's an area of concern. S&P futures, S&P is below 50-day moving average, right? They're struggling with the 50-day moving average, very important support level, right? If we drop below that level, right, that's the June 14, this is the, I believe, CPI data, better than expected CPI data, then Friday, Monday. Well, no, this is over the weekend, so it's not June, but this gap, right? So then it will try to fill this gap around 5,400. And we know that there's a lot of support at 5,400. So we're sitting at two important supports. QQQ already broke through the 50-day moving average, right? Kind of a sharp pullback in QQQ. It's struggling with this long-term uptrend, right? It broke the uptrend, traded above that. Now it's trading below that again. John, good morning. Bob, Chuck. AT&T is also rising. Yes, so people are rotating into safety asset classes. So yesterday, stocks like, I think there was, let's see. Yeah, Pepsi. Pepsi is on the list of stocks. Pepsi yesterday had a sharp rally, right? Consumer staples. Sharp rally yesterday. So the people are buying, Cokes of the world, Pepsis of the world. And yes, and AT&T also had a sharp rally. So people are rotating into safety asset classes, and you can see majority of the stocks outside of Magnificent Seven are still at almost all-time high, right? They're almost at all-time high. The decisive break above this uptrend, about 50-day moving average, still trading above. So there's definitely broadening of the rally underneath the momentum stocks. Small caps actually did have a sharp pullback yesterday as well, right? Sitting at this 50% retracement, 200-day moving, 50-day moving average. So small caps are also struggling. So these are the levels that I'm paying attention to on small caps, on Nikkei, on yield. Yield touched 3.8, and then let's look at the positioning. So market just opened, QQQ down 70 basis points, semiconductors down 1.5%. Spiders are fighting for the 50-day moving average. For the 50-day moving average, 550, right? So this is an important line in the sand. We talked about this yesterday, right? We said this is a support, but it's not really well positioned. So we are kind of reacting to the macroeconomic data, right? Yesterday, I don't think there was a big surprise that China economy is decelerating, or manufacturing data in China and the United States both were down, but they've been down for the past 2 years, right? It's not like this is something new. But the way market participants react to this news, definitely you can see, people are now less concerned about inflation, they're less concerned about earnings. Now they're more concerned about soft landing versus hard landing, so they do pay attention to the macroeconomic data, right? Today we have beige book, we have consumer confidence, I believe. This is all, again, could spark volatility in the market. So we've talked about that into September, you don't really have any hedges up until 540. Nothing of significance, right? I mean, into unemployment data, which is 5,696. I mean, there's some hedging, but I would say insignificant, right? This is all very small VANA. So into September, I think, if the 550 doesn't hold, right? If the 550 doesn't hold, then the next level is 540, right? There's really no support up until 540. That's why it's important for the bulls 2, and we can quickly drop to basically this support level, 537, 540. Close the gap, right? Close this gap. The Thursday the 15th. This is, I think this is CPI data. Thursday, or initial claims. Don't remember exactly. I think CPI was here first. Yeah, but anyway, so. So I would look at, this is your first support. If you're going long, this is your first support, and then I would put 540 as your second support. Right, so this is support number 1 for day trading, and support number 2. So if you're putting on a trade right now at 550, I mean, I would use 2% stop loss. Whether you're day trading or you're doing longer term trading, I would, yesterday we moved 2%, so VIX is above, I think 20 now. So 2% daily price fluctuation. If you hold in position overnight, I would still use support number 2 as your hedge, right? So, so that's about 10 points, right? So 10 points. 10 points if you're doing day trading. The point is not to risk more than 1%. If you carry position overnight and you, on average, you have 10,000, still, 2.5%, right? Longer term trading, you're risking more. In short term trading, you're risking less, smaller percentage of your portfolio. So 250 divided by 10 is 25 shares. Any questions? So you just take 10 shares divided by 25, 250, that's your stop loss. Stop loss and how many shares you can afford. You can see VIX continues to jump. We're at 22, I believe, unless this is delayed. All right, no, I think we are at 22. VIX is at 22. So you have jump in volatility. All right, so we have Zscaler. I closed the trade yesterday, right? I didn't want to take, the stock, the butterfly actually rallied by 50%, right? So 50% is, doesn't happen very often, especially intraday, right? So I bought it. I bought the butterfly for 28 cents, closed for 43, right? So 15 cents, more than 50% profit on the spread. I mean, obviously, if I held it right now, it trades significantly higher. Right now, if you did not close it yesterday, it trades at $4.50. $4.50. So this is a perfect example where you could have an outsized return, right? I put in a trade for 28 cents, financed it with a short put. I am risking $5. I mean, if it had a significant rally and jumped to 235, maximum loss is $5. But here, maximum gain is $10, right? Maximum gain is $10. And let's say you didn't do this spread, then you can invest 28 cents and make, right now it's trading at $4. Any questions on the Zscaler? So I decided not to take a risk because market sold off and it had, significant move, but right now I'm basically watching, and it's trading at 159, around 156 level. And usually you want to wait 15 minutes, right, to kind of determine main support and resistance levels. Any questions? Any questions? Am I still holding IWM hedge? I think it makes sense to at least have a one. I mean, you can assume that the sell-off is going to be over, right? Obviously, it's very sensitive to interest rates, and it's very sensitive to the macroeconomic data. So I mean, the main event of this week is obviously unemployment data on Friday, right? If unemployment comes in better than expected, then I think market will rebound. Maybe not a lot, but it will rebound. But if it comes in rotation, I think 4.2. If it jumps to 4.5, 4.4, I think market is going to have a hard time, holding on to these level, will not hold on S&P. So you can see that market is very sensitive to macroeconomic data. Today we have job openings, right? In the next 22 minutes, we're going to have job openings. Some people think that could trigger the market, right? If the job openings continue to drop significantly. Beige book is usually considered to be a forward-looking indicator of economic activity, right? And that has been very weak in the past year or 2 years. So that could also spark volatility. So anytime you have this macroeconomic data, it sparks volatility. And right now, IWM dropped below 50. It's right at the 50% retracement. It's a 50-day moving average. It is the key support. If you have more than one contract, right, or if you're overly hedged, right, because I had QQQs, put spread as well, I had spiders, and because you were more concerned, or you have more than one contract of IWM, right? So we're discussing the hedges that I have. Trade log, IWM. Anyone held on to the D-scaler, the DS put barfly? Anybody still holding that? Anyway, so IWM, I did sell 210, 215 call, right? 210, 215. So we're right at the money. So if you have more than one contract, it's obviously oversold, holding the support. So if unemployment data comes in better than expected on Friday, we could have a bounce back. So maybe I would close at least one contract. But if IWM credit call spread, if this is your only bearish position, I would hold on to it, right? Because I still think there's more room to the downside, right? I'm not sure what could be the positive news in the market. I mean, unemployment data could be, but still, I think macro data has been weaker and the economy is decelerating. And I think September and October are going to be volatile time where small caps could revisit the lows, right? I think, if you assume that we will not revisit the lows, I think that's the wrong assumption. We don't have to revisit the lows of spiders, but I still think this would be a long, assumption. Any questions? VNO turning positive, eBay turning positive, JP Morgan turning positive, Nikkei is still down, Magnificent 7 are okay, Apple is down. So let's review positions. At least enter any questions that you might have. I do need to leave around 9:05. So I want to make sure we're done by 9:05. So if you have any questions about positions or what to expect, let's review that now. So okay, so Zscaler. Anybody? Is anybody holding Zscaler? Volume looks only. Thanks. Nobody. Okay. Question and fix did not spike to 60. Yeah, fix did not spike to 60, but it is above 20. Anytime VIX is above 20, right? Anytime VIX is above 20, that's right. We were at 23, now 21. Anything above 20 considered to be right. This is where we in April the highest the VIX was at 21. Anything above 20 considered to be market is kind of people are hedging the market is vulnerable for additional pullbacks. And we talked about that. This is leg one. This is leg two in jump in volatility, and it could get much higher, right? Based on macroeconomic data. What was the question? Was a good question. What was the rationale for entering Apple? So let's look at the position for Apple spread yesterday. Well, I entered the trade over the weekend, right? And Apple is outperforming the market, right? It's staying at 230. It was staying above 50-day moving average before yesterday. So I issued these signals on Sunday. I didn't know that Monday we're going to have 3% pullback in QQQ. And a lot of it is portfolio construction, right? I have IWM short position, but I did not have any long position, right? And this Apple, this is a trade, not even Sunday. This was entered August 26th, right? The week prior. So on August 26th, I did put order for $3.30. And if you expect a pullback, that's why I put it a little bit away from the market. So that's why the order was entered a week ago and it only got triggered yesterday because we did have a sharp pullback. And I think by October, we probably, what's the spread? 215, 220. So it's October 215, 220. I think it will hold this level. Right. I mean, it might drop to 200. If you do have a sharp sell-off after the unemployment data, let's say, or some rise in, some other macroeconomic data or geopolitical risk, we could drop. We could revisit the August lows. But I still think it's going to be a choppy market, and I think that's probably the worst case scenario. And I think by going into the earnings event, October. I think market will rebound, right? Based on seasonality. Maybe November is probably a better month, but that was the reason, right? I didn't have any October position yesterday. I didn't have any October position. Now I have to JP Morgan and Apple, and I'm trying to buy the most bullish position. So yeah, so from seasonality point of view, yes, September, October, usually you have sharp pull, but toward the end of October, November, you usually have a rally. I think history will repeat itself, but October might not be enough time. Just depends on how deep is this pullback. So right now I'm using 50% stop loss, right? So I put on a trade for $3.20. If it does drop to $1.60, I would exit the position, right? Because October 18 might not be enough time to recover. But for now, Apple is oversold and it could bounce back. Any other questions? GitLab continues to rally. So GitLab is up 16%, right? We talked about GitLab yesterday. And a lot of this is, positioning, right? We looked at the positioning for Zscaler yesterday. So I mean, it was kind of evenly spread, but you could see a large gamma at 170, right, and some 160. But then it kind of kind of dies out, right? So that's why for the Z scalar, I chose 155 because there is really no positioning from 155 to beyond that level, right? It kind of dies out. So I think that's why I think Z scalar it kind of holding on to this 160 level. Any questions? In terms of positioning, open interest, at which strikes. So this is Zscaler, and then GitLab. Let's look at the gamma levels for GitLab. So there was a very large position at 50, right? 50 and then 55, right? 50 and 55. So I did have a butterfly 55, 60, 65 spread because I see outside of 55. Let's do more. Let's do show strike. The biggest position is at 60, right? The biggest position is at 60. So that's the strike that I sold. So 55, 60, 65, right? And then there's nothing outside of that. And again, most of the position is the weeklies, and then September 20. So people, another way is to do a calendar spread, right, or diagonal. So that's Zscaler and Raymond, thank you. Same thoughts on JP Morgan. I think we are in the bull market, right? And even though I do believe we could have I think Tom Lee, right, fund strat manager, he's always bullish. He never says anything bearish. Even when the market was down 30%, he said, you have to give him credit. He's always bullish. But even he said that market but he said market could pull back 5 to 10% in September, October. So if Tom Lee says the market can drop 5 to 10%, then it's probably, if Vlad says it's 10 to 15% or 10 to 20%. But I would not be all bearish, right? I think JP Morgan is a strong stock. We do have yield, right? Main topic of all the discussions right now are yields. And 2-year yield is almost the same as 10-year yield, right? We talked about 210 and 230. So yield curve is normalizing, and JP Morgan is one of the main beneficiary of that, right? So even though obviously it can pull back further, I still think, this is a strong chart, and I would be surprised if we revisit the lows on JP Morgan, unless we have some kind of dislocations, right? Like we had was what is it called? Was the yen carry trade, right? If Nikkei all of a sudden starts to move like this, right? Then it's a problem. Right now, volume is still relatively small compared to this. But you can tell this exhaustive rally, rebound, and it's slowly probably pulling back, and market is probably going to follow. Any other questions on the? All right, it's 8:52. What else? What else? What else? What else? Okay, so let's review positions since I do have views. Okay, so Apple, October, I have time. The biggest concern right now are September positions. September, the clock is ticking, right? We have basically after this Friday, have 2 weeks. So the only September position I have is the IWM, and that, I mean, one way is to roll, maybe close September, roll it into October, but I think this is a pretty significant pullback, and I think it makes sense to hold on at least to this one hedge. So for now, I'm holding on to IWM call spread. It's in the money, right? But it's very sensitive to the price movements. If October contracts are less sensitive, right, less correlated to the movement of underlying asset class, September contracts are highly correlated now, as because of the time decay. We talked about JP Morgan, October, still hold on. If you're not comfortable trading, put some calls, right? And you want to hedge SH, right? SH has been a good hedge. Spiders are sitting at the key support, right? At 50-day moving average. If it does bounce, right? If it does bounce, we'll see where we're going to close. I think it makes sense to hold on to SH, because if this level doesn't hold, if we have another leg down, and we try to close this gap, well, I think at least 540, we should reach 540 in the next 2 weeks. And October is going to be very interesting, right? October, I think, is going to be very interesting because, let's see if it changed. No, see, a very small and not concentrated positioning, right, in terms of gamma dealers exposure. And the first level stands after the set expiration, right? Market is very vulnerable to the pullback beyond 540, right? After Apex option expiration in September, right? In the next 2 weeks, that will open the doors that if there's any negative news, unemployment data, CPI data, whatever, macroeconomic data, we could quickly drop to 520, revisit the lows, basically. If 540 doesn't hold, there's really no support 520. So very vulnerable position, but I think between now and, third Friday of September, I think 540 it should hold in case, unless there is some kind of a black swan event and dislocations again. But that's kind of my thought process. And it also confirms the model, right? The model just reran. And basically says, well, still in bullish trend, not a lot, not a significant force, momentum behind the bulls, not a significant momentum, but nonetheless still positive. But it does call for 520, 523 level, right? So if we reach 520 or 523, personally, I would not be surprised. I would say any negative news like CPI or unemployment data, and you could be at 520 rather quickly. So for that reason, I propose to keep a hedge. So that's SH, and then what else do we have? SLV and VNO. So SLV and VNO. Silver has been trading highly correlated to the markets, right? So it continues, it rallied together with the spiders, right? Similar to maybe spiders QQ chart, now pull back again, right? I would be a buyer on silver right now, probably wait till dust settles, but I think if it reaches 200-day moving average, I would be a buyer of this silver. And REITs also have been in strong uptrend, and actually, it's holding on to its breakout level, which is 32, right? 32 levels. So for now, I think it makes sense to have definitely anything with healthcare. If you want to, where people are rotating, they're rotating into healthcare, they're rotating in consumer staples, right? And they're rotating into utilities, right? Defensive sectors, right? Utilities making new all-time highs. So definitely is a place to model it, become bearish, Short-term thread, thank you. Silver, yeah, so silver I would be a buyer and pullback. PSA active peak, good, breaking out today. Yeah, CS on daily basis, if you go to Yellow Tunnel, aggressive power trader or active trader, Tradespoon, active trader, same information. Usually aggressive power trader, a little bit more, right? Not a little bit more, but if there's more signals, I don't limit it to 3. So here you have insurance has been leading, Pepsi has been leading, PSA, right? REITs, public storage. So all of these are still a strong buy. Stock only trade, right? Keep in mind, some people ask me, Vlad, why did you put this if PSA doesn't have liquid options? Well, we have subscribers that don't trade options, right? That's why we kind of give you choices, right? You have your stock tab and you have your options tab. But yeah, PSA, you have to go into September expiration. If you have weekly expiration, usually it's liquid. If you don't have weekly expiration, more often than not, it's just not liquid. But doesn't mean it's not tradable, right? Doesn't mean. So you do have to kind of decide on your own. Or you have to watch live trading room, and then you'll rarely see me do option spreads on PSA. On Pepsi, maybe, but not on PSA. Any other questions? All right, 9:58. So I covered all the position. Let's see, earnings. What do we want to consider for earnings after the close? Yeah, and Dollar Tree, right? People are scratching their heads. Well, if we're in bull market, Dollar Tree should rally, and if we're in bear market, Dollar Tree should rally, but they're not. Right, and one interpretation is that consumers maybe at the spectrum are struggling, right? And and so Dollar General and Dollar Tree kind of has confirmed that. Walmart is doing well, so another thing maybe competition, right? Instead of shopping in Dollar General, you go and you buy Walmart or Costco that do better. Okay. So HPE, so we can do HPE, I think aftermarket, or AI, right? HPE, AI are very liquid, very volatile, right? AI is probably like Zscalers, But again, it's very volatile, so I would be careful. Maybe you do butterfly on both, because I assume, unlike Zscaler, it actually has very high positioning. Yeah. $25. So it does have a large position at 25, 25.50, implying 10% move, right? Implying 10% move. I mean, it's a lot more volatile than that. Let's see. So expected move is 20%. Interesting enough, 20% would be $5. So $5 would be 28. So, I mean, you have some position at 32.5. So some position at 32.5, and it is here some position at 2019 level. I mean, this is open invitation for negative surprise. So I would use butterfly, the same thing, butterfly, maybe select these strike prices. I mean, 10% move. So maybe, yeah, maybe like 25 is too close. Right, so 20, 10% to 30, yeah. So maybe 20 or 21, 21. And find the middle strike. Let's see. Yeah, there's really no position. It's kind of open field. So 20% move implies $5, so 18. So you can do 18, 16 spread. There's no really options here. So then you could buy 19, put 18, and 17. 19, 18, 17, put butterfly. right? Because nobody's, very little positioning. Everybody's bullish or hedging, right? Bullish or hedging. But puts are vulnerable for negative surprise. DK's job opening must be bad. Market dropping, gold rallying. Let's see. So we do have job openings, right? Job openings. Let's see. We're dropping. Yeah, so C10-year yield will probably accelerate. QQQs for now, not too bad, right? It's not reacting, but interest rates are reacting. So interest rates are reacting, and I think QQQ and spiders will react too. So I would watch 550 level. We know this is, if we break through below 550 level, I think I would add to some of the bearish positions. If we drop below 550, I would add to bearish positions. Any other questions? All right, that's all I have for today. Thank you very much and have a great day. Thank you on Discord. Thank you on YouTube. Cherry Blossom. Oh, we have a lot of people today. Elmar, Cherry Blossom, Letter, Ricky B, Russer, new people. All right. Thank you, Discord guys. Appreciate your attendance. We'll see you tomorrow morning. Same time, same place. Thank you, Bill. Take care, guys.